Hello students, in class we have started with holding and subsidiary company. That is how to prepare consolidated financial problem. And we have solved in class three basic problems to prepare consolidated financial statement. Now moving on to the next problem, problem number 4, which deals with adjustment, different adjustment. So now from problem number 4 onwards, we will cover different type of adjustment that can be asked for your examination. You know the basic concept how to prepare the consolidated financial statement. Working notes also you know, but sometimes different adjustment can be asked. So we'll cover in each problem different kind of adjustment. So in this problem number 4, there is adjustment regarding revaluation of asset. Before starting with this problem, we have to understand what exactly is revaluation of asset. So students, you basically know that while preparing consolidated financial statement, holding company takes over subsidiary company. Whenever holding company is taking over subsidiary company, it takes over all the liabilities as well as asset. The asset can be taken over by holding company at book value or more than book value or less than book value. Whenever holding company is taking over the asset for more than book value, it is called as revaluation profit. Below book value, it is called as revaluation loss. So basically, what will be the treatment of this revaluation profit or revaluation loss while preparing the consolidated financial statement? And what will be the treatment of depreciation on this added revaluation profit or loss that we have to see in this problem? So we'll start with problem number 4. In problem number 4, the balance sheet of X Limited and Y Limited as on 31st December 2017 is given. Before starting with the problem, we have to find out which is the holding company, which is the subsidiary company. To find out which is the holding company, which is the subsidiary company, we have to see into the asset side in non-current asset, non-current investment. Here it is given that X Limited is holding 9,000 shares in Y Limited on 1st January 2017, which means that X Limited is holding Y Limited by having 9,000 shares. Total shares Y Limited is having, if you see this carefully, they are having 10,000 shares. That is 1 lakh divided by 10 rupees. Out of this 10,000 shares, 9,000 have been taken by X Limited. So in short, X Limited is holding Y Limited. Once you identify the holding company and subsidiary company, you have to see different type of adjustment or additional information which is given. So on 1st January 2017, profit and loss account of Y Limited shows a credit balance of 8,000. This is required for calculating the goodwill or capital reserve. Then more information is given saying that equipment of Y Limited was revalued by X Limited at 20% of its 20% of its book value of rupees 1 lakh. So this is the treatment adjustment containing revaluation of asset. Prepare We have to prepare a consolidated balance sheet as on 31st December 2017. So in this PDF file, I have already given you the solution along with notes to accounts. But I will just show you how to prepare the working notes in this video. Okay, so please remember that just ignore this chart C, okay, chart B, and you can just write down the working notes. Okay, as I am showing you the working note, you just have to mention how this amount figure is coming, how the minority interest is coming, how the external liability is coming, how the equipment, how goodwill and other current liabilities is coming with the help of working notes. Working notes amount will be directly shown in notes to accounts, and you have to mention which is the appropriate working note. Before the working note, I will give you a separate note for adjustment of revaluation of asset. In the problem, it is mentioned that on 1st January, the value of equipment of Y Limited was rupees 1 lakh, given in the problem. On 31st December 2017, it has been shown in the balance sheet at rupees 95,000. If you see it carefully in the balance sheet, the amount of equipment is mentioned as 95,000. But as on 1st January 2017, it is mentioned that 1 lakh is the value of the equipment. So there is a difference of 5,000. So the difference of 5,000 from 1st January 2017 to 31st December 2017 is for depreciation purpose. So 5,000 is depreciation. If you are getting 5,000 as depreciation, you can easily get the rate of depreciation. The rate of depreciation will be 5,000 divided by 1 lakh into 100 is equals to 5% is the rate of depreciation. That is, by using cross multiplication method, you will get 5% as the rate of depreciation. Plus, information is given that the asset is revalued. That is, 1 lakh is revalued at 20% of the value. If it is 1 lakh, so how much will be the 20% of 1 lakh? It will be 20,000. So the new value is 1 lakh 20,000. That is 1 lakh plus 20% is equals to rupees 1 lakh 20,000 is the new value of asset. But as per the books of accounts, value was only 1 lakh on which depreciation is charged at 5%. 5% that is 5,000. But the depreciation has to be charged on 1 lakh 20,000. If you calculate the depreciation on 1 lakh 20,000, 1 lakh 20,000, it will be 6,000. Yes, but already we have deducted 5,000 from the asset, right? As a depreciation. So how much is depreciation left? 1 lakh 1,000 depreciation is still left to be charged. So from this we are getting that the revaluation profit is 20,000. Depreciation adjustment of 1,000 has to be given effect. So in short, there are different treatment has to be given. 1,000 depreciation have to be deducted from profit of rupees 20,000 and 19,000 have to be shown in date of consolidation. That is, as on 31st December 2017, profit is being shown in profit and loss account of subsidiary as 20,000, but 1,000 depreciation has not been charged. So from this 20,000, 1,000 depreciation needs to be charged because depreciation is charged less. So new profit will be 19,000, and also same 1,000 have to be deducted from equipment as depreciation because new depreciation is 1,000 is deducted less, that has to be deducted from equipment, and plus 20,000 revaluation profit has to be shown in date of acquisition and date of consolidation, and same 20,000 have to be shown in equipment, added to the equipment. You will understand this with the help of the diagram that I will help explain you with the working note. Okay, so this was the treatment of uh, revaluation of asset. So here you have to keep in mind that revaluation profit is 20,000 and depreciation charge less is 1,000. That needs to be given treatment. So students will start with the actual solution to question number 4. That is working note. This problem deals with revaluation of asset adjustment. So working note I will show you with the help of proper explanation, diagram explanation. Before starting with the diagram, first we have to calculate how much is the holding and how much is the minority. Percentage of holding is calculated on how many shares taken by X Limited in Y Limited. So I already spoke to that about 9,000 shares have been taken over by X Limited in Y Limited out of total of 10,000. So to get the holding, we just have to multiply by 100. So holding percentage is 90%. Minority is 10%. So from this, it is clear that 90% is holding and 10% is minority, and this is a partial holding. And because of this partial holding, we need to calculate a very important amount, that is minority interest. We need to calculate minority interest. After this, we have to write down 1st January 2017. This is called as the date of acquisition. On date of acquisition, we will calculate cost of control. That is, we will calculate whether there is a goodwill or capital reserve. On this date, X Limited is taking over Y Limited. So at that point of time, we have to calculate whether they are paying more or they are paying less. If they are paying more, goodwill will be the result, or less, then capital reserve will be the answer. If goodwill, then goodwill will be shown in the balance sheet on the asset side in intangible. I have already told you it will come in the asset side in intangible. Capital reserve in will be reserves and surplus on the liability side. And 31st December 2017, we need to calculate, since this is a minority, is there minority interest. It's calculated. To get calculate goodwill or capital reserve or minority interest, most important is to get net worth. How much is the net worth on as on 1st January 2017 or 31st December 2017? So first we'll start with calculation of cost of control. So to get net worth, first important thing is to write down share capital. At the starting share capital, general reserve and profit and loss account. In this problem, there is no general reserve. So share capital is 1 lakh. As on 31st December, also the share capital is 1 lakh rupees. Profit and loss account, the value is already given as 8,000 in additional information. And to this, I already told you that revaluation profit will be added, because on 1st January 2017, it is mentioned that asset is revalued on 20% on the book value. That is 1 lakh is the book value. On this 20% is 20,000 will be the revaluation profit, which needs to be added to this existing profit. Same 20,000 will be carried forward at the end of the year also. And I have already told you that on this extra 20,000, that is 1,20,000, 6,000 depreciation needs to be charged, but 5,000 depreciation is already charged, and remaining 1,000 for this full year needs to be charged. And whenever, so you already know that whenever depreciation is charged, it is debited to profit and loss account, and the profit at the end will reduce. So profit at the end is 20,000. From this 1,000 depreciation needs to be deducted, and new profit is 90,000. And same 20,000 profit will be shown here. Now we will find out how much is cost of control, that is goodwill or capital reserve. So after adding all this, we are getting 1,28,000 as the net worth as on 1st January 2017. So out of this, holding is 90% and minority is 10%. This we don't require this 10%. We are just saying that how much X Limited is paying for this holding 90%. So 90% of 1,28,000 is 1,15,200 is the value. For this 1,15,200, if you see in the balance sheet in investment side, investment X Limited for holding 9,000 shares, they have paid 1,40,000. So X Limited is paying extra for a value of 1,15,200. So that extra 24,800 is called as goodwill. This goodwill will be coming in the balance sheet in intangible asset, as I have already told you. After calculating goodwill, we need to calculate how much is the minority interest. For getting minority interest, again you have to calculate net worth. So the net worth is 1,39,000 as on 31st December 2017. out of this holding is 90%, minority is 10%. So whenever we are calculating minority, we take only this 10%. So on 1,39,000 into 10%, so minority interest is 13,900. This 13,900 will be 13,900 will be shown in the liability side as minority interest in the balance sheet. Okay. So from this calculation, we are getting goodwill, we are getting minority interest. Now we have to see how much is the difference from date of acquisition to date of consolidation in profit. If you see 8,000, there is increase to 19,000. So difference is 11,000 is the difference. So from here to here, 11,000 is the additional profit made by the company after company Y is been taken over by X Limited. So this 11,000 will be distributed to minority shareholder and holding in the percentage of 90% and 10%. Okay, so that I will show in you in working note profit and loss account. Revaluation profit, there is no difference. Okay, same amount is there. This profit is basically because of the revaluation of asset. Now, after once this working note, this diagrammatic explanation we have understood, your concept is clear with this revaluation of asset adjustment. Now we'll prepare other working notes. The first working note is share capital. I already told you that only 4,000, that is share capital of holding company will come. It has to be shown in the consolidated balance sheet. Then reserves and surplus. In reserves and surplus profit and loss account, X Limited is 50,000 given. Y Limited, we will take 11,000, 90% holding. Only 90 because full 11,000 is for full year. But out of this 11,000, only 90% will go to X Limited for consolidation. So 9,900. So total is 59,900. Okay. So this with this reserves and surplus, this working note is complete. This 59,900 will go to notes to accounts and then that will be transferred to balance sheet. Then after this fixed asset, very important adjustment is fixed asset. So in this fixed asset, equipment is given. The amount of X Limited is 2,50,000. Y Limited is 95,000. Okay. So to this, we have to add revaluation profit, that is 20,000. Okay. 3,65,000. And to this, we have charged depreciation less. The amount is 1,000 which needs to be deducted. So this is very important. Please revise this adjustment again. So amount is 3,64,000. This will be going in notes to accounts and then same amount will be taken into the balance sheet. After this working note, we have to see some other working notes like I already explained you this, but other current assets, X Limited is 8,10,000, Y Limited 5,05,000. There is no adjustments. Directly 13,15,000 will be coming in notes to accounts. Then external liability X Limited, it's 7,50,000. Y Limited is 4,80,000. Uh, Amount is 12,30,000, which will directly be coming into the notes to accounts. With this, your working notes are over, and then whatever working notes we'll just transfer the amount here. That is, for example, 4,000. I have shown you how we are getting 4,000. I have shown you how we are getting 59,900. I have already shown you 13,900 is the minority interest. 12,30,000 how we are getting. Equipment 3,64,000 how we are getting, and goodwill 24,800 and 13,50,000 other current assets how we are getting. So with this, your problem number 4 is completed. If you have any adjustment which you have not understood, you can WhatsApp me along with problem number and then what exactly is your difficulty. Thank you, students.